there is a lot here that I do want to talk about on this chart that I had posted on TradingView earlier today. I'm likely not the first person that has seen this. I'm not going to be the last person that's going to talk about it. But some really interesting things looking at the Dow Jones Industrial Average, which it's it's a it's understood to be one of the main metrics for really looking at the stock market and measuring performance over time. It's got a long history all the way back to 1915. Uh, and there's a lot that's happened in that amount of time. Of course, we have the Great Depression. We have wars that have ensued. We've got all kinds of stuff that has, contributed to the ebbs and flows, as I like to call it, of the stock market. Um, okay, so first things first. What we have right here, we have a dominant pivot, and we all know this in October of 1929. That's when we had our Great Depression and the starts of it, and we basically fell a significant amount all the way through 1932, and then we know what happened between 1932 and 1945 or 46 with World War II, kind of bringing us up out of our slump. We had a lot of significant things happen in that period of time. And so what I think I'm going to go ahead and do here, I'm just going to go ahead and draw some of these things that happened in these time periods. So we definitely saw a little bit of consolidation. You could call this a little bit of a bull flag. And again, I'm on a 6-month scale. So every one of these candles spans about 6 months time. So I'm not going to spend a whole lot of time worrying about wicks. I'm basically going to be focusing on candle bodies because that's really what matters when you're looking at candles that span that much time. As we're consolidating up here, we also have continuing consolidation on our RSI. And so the RSI also has some resistance in this area, eventually did break out of that resistance. And when that happened, of course, we know we were able to break out of it. We had a little more consolidation, but then we moved up and finally broke through and made some new highs. And this didn't happen until 1954. So basically, all the way from 1929 all the way through 1954, in my opinion, this was basically a recovery. We had, of course, a lot of capitulation. A lot of people lost so much in this time, and then we finally started to recover. We found some support in this area. I'll go ahead and mark this area because that is significant support. But again, that's only at $417.80. Keeping in mind this is a log scale, we're at 26,078 right now. If I move this out of log scale and I put this into perspective, you can see that this is, nothing in the grand scheme of things. Okay, we didn't really have a whole lot of volume come in play until we hit this median line. And I want to focus on this median line right here because this is where we kind of broke through. And if I again go back to a regular scale, we can see right here we had massive growth, right? And this took us up to what we refer to as the dot-com bubble. And then we had massive growth, and this took us to the collapse, the mortgage collapse. We had subprime mortgages, all kinds of bad things happening. So we basically had from this point right here, which is in 1994, about the time Bill Clinton was president of the United States, we had, bull market, we had a surplus, and then we had, the dot-com bubble, we had 9/11, 2001, we all remember that. That started a little bit of a correction, right? And then we had, another bubble. And this was, we called it the mortgage bubble, but, we had a bubble in the stock market. And then we corrected even lower, right? So we were coming all the way down here. So this area right here, again, this is going to be our support, significant support at 83.45. I still remember the days when Dow Jones was like 7,300, and I do remember that very clearly. That was, again, about the time that that Bill Clinton was, moving out of his presidency, and then George Bush was eventually kind of brought in. And of course, we know what he had to deal with in 2001, with the war and everything. But from an RSI, and let me go back to the log scale here, from an RSI perspective, we had a dominant pivot top here on the RSI. We had a top here as well, and then we had some bearish divergence on the second top, which was, again, this was our mortgage crisis here in the United States. So we had another high here, and then we had a lower high on the RSI, and this is on a 6 month scale. So again, we're talking a long time that it took for this to really play out. But now let's take a look and see what happened in the first half of 2017, or rather the last half of 2017, moving ourselves into 2018. I still remember the headlines that traders that sold off, and it was a picture of a bunch of machines, because this stock market is heavily driven off of algorithms. It is machine driven, and it is no surprise that that people are going to be trying to take profit in this range. We break 25,000, and depending on where these algos bought in, again, I'm looking back here. I'm looking back at this 3,800 range, which happens to be where we break through this median line. These points are important in my opinion, because we have support here at this median line. We have lots of support down here as well. So this should count as significant support if we are ever to come back down to this area, which would be pretty catastrophic if you ask me from a stock market perspective. Moving yourself all the way back down to 3,700. I mean, if you had to project that, it would basically look a little bit like this. And to watch something like this happen would be, not good, especially for people that have, a um, heavily weighted portfolio, like especially for 401k based on stocks and less on bonds. It's why it's always good, not that this is financial advice, that's why it's always good to diversify your portfolio, because you never know when something's going to happen. And I am definitely not saying that we're going to come all the way back down here and hit 3,700. I'm simply saying that this trend line was resistance here, and now it is becoming support here. And again, I'm on a log scale, so keeping that in mind. And I'm using these trend lines starting all the way back in 1929. So, maybe I'm being a little extreme, maybe I'm being a little over the top on how I'm projecting this out. But, looking at an RSI, we are still in bullish territory. The RSI is still right around 80. And that's not terrible. But, as this starts to kind of move its way down into neutral territory, we're definitely going to wait to see what happens up here, especially if we get a bounce, something like we come up and do something like this, and we go up and even get close to 30,000. Right now we're at 26,000. We had some decent tops up here. We recently got to about 27.5 or 28,000. For us to kind of test this top trend line that we have up here that we actually haven't tested yet, that would be pretty significant, and I would really expect there to be a pretty significant reaction off of that to take us down a bit, at least to correct us. This area is really where I'm going to be focused on. This area here at about 14,575, 14,600. That's going to be a pretty significant area of support. And again, this can take a significant amount of time to happen. So keeping that in mind, a couple things that I do want to make note of. I want to make note of several economic events that are currently taking place right now. We know we have a trade war going on with China. We know that there was some fear, uncertainty, and doubt put into the stock market just a few days ago. A good example of this is a car company that's in China that I do pay attention to, and that's NIO. It's a Chinese car company, and I'm not going to look at the 6 month chart because that doesn't really do it justice, because it was doing fairly well until here recently when some of that news did come out. You can see here that it launched between $5 and $6 a share, and it topped out, then it came over here, went to about $10.50, and it's been sort of going down ever since. But today had actually a significant bounce. It went down to about a buck 20, and then started to finally move its way up a bit. I do tend to think this is a little bit of a reactionary bounce. It's going to come up here to about $2.70 and finally work its way down and roll over. This is one good example. Roku, this is another example where it just had been just obliterated. We had basically a good top up here at about 175 or so, and it's been really going down ever since. We do have, of course, a little bit of what looks to be, some flags as we're going down. Then we started ourselves in a little bit of a descending wedge or so, which tends to be a little bullish. This $99 to $100, this is going to be really important support for this to hold. The RSI and the daily is really super low. But just keeping in mind the trade war that we have with China and how that will affect the stock market, because fact of the matter is, if we have less consumer spending because tariffs are higher, and sorry to say, tariffs are not paid for by China. Tariffs are paid for by you and me based on the goods that we buy. It's just like taxes. Taxes don't just come out of nowhere. Taxes come from you and me paying these taxes. Free healthcare isn't free. Free healthcare is paid for by taxes that you and I pay. I'm not against any of these things. I'm simply saying that all of these are paid for by you and me. And if we're taxed at a higher rate, or we're paying more for our goods, and we don't have the increase in wages to cover these, then naturally we're going to spend less. We're going to try and save more, because things that we have to buy are going to cost more. Things like food, milk, groceries, things like that. Fuel for our cars. We've got oil that is doing fairly well now as well. So there's there. Let me just take a look here at crude. Crude is again a little bit of a downtrend here, but again, if we look at it here, we are going to be kind of bouncing in this area. I would expect, looking at a 3-day scale. On a weekly scale, this is prime territory for us to create a triple bottom and start to work our way back up. I don't think we're going to go back to the area where we were looking at like $144 oil like we did back in 2008, where we had the housing crash, right? Because this is that same time where we had that crash. But we are definitely going to start moving back up on oil, maybe going back to 75 or $85 for a barrel of oil. Nonetheless, these are all going to be weighing on the stock market, and especially those that have those 401ks that I was talking about earlier. You've got lots of losses that could be incurred. So, I'm not going to make any suggestion that anybody go out there and make any adjustments to their portfolio based on anything that I have said. I'm simply saying that it is important for you to do research, for you to be well informed, and for you to to make decisions with your financial advisor on on the status of the market. So I talk a lot about the trade war. I am actually a firm believer that China is actually using this as a bargaining chip to make themselves look better, and actually to hurt the United States to a certain degree. I do think that there will be a deal with China. I actually believe it's not going to happen for at least the next, it's going to be a while. It's going to be probably right before the election. So we're looking probably about a year before this happens. Again, looking at the stock market on this same scale, working our way back and taking a look at things, if we're looking at 1 year down the road, if we're looking at a year down the road, we're basically looking at for this candle to complete and for the next candle to complete. So, it's very possible for us to kind of work our way down here to get a good discount on the stock market, and then for us to kind of move back up where we do finally get that deal, and that can take us up there, probably to blow off top before we come back down here and finally start to correct a little bit. It all depends on who our next president is going to be. It depends on what their economic policy is going to be, how they are able to negotiate with our trading partners. And there's just a lot of factors that are going to go into how the stock market is going to react. Very obvious here. Not just breaking through, but there was a lot of optimism with us moving from a deficit to a surplus with the United States budget. Lots going on there, especially to see ourselves, you know, pulling ourselves out of the hole, so to speak, from a um, uh, nation debt perspective, as we're starting to work our way into a surplus, things are looking very good. That's good for boosting the economy. We had a war that corrected the economy. And then, we had our housing bubble, and then that finally popped. And then we had Donald Trump that was elected president. What I'd like to do is go to the day time frame, and I want to go not on a log scale, and I want to go back to when Donald Trump was elected and how that affected the stock market. What I actually want to do is I want to put our volume back on here so we can see the volume, because I have talked about this in the past a little bit, and it is extremely interesting how this all worked out. As soon as Donald Trump was elected, we had massive, massive amounts of volume that came into the market. So I'm going to hide my drawing tools, and I'm going to just show the let me get back to this tool. I'm going to go back to here we go, and removing the drawing tools again. Now let's go ahead and move this. New pane above. And I am not getting volume, probably because this is not the right chart. Let me pull up the right chart for this. There we go. Okay, so I'm not getting the volume that I was looking for, and maybe I'll post this to the Discord when I'm able to get this. But when Donald Trump was elected, again, what we had just a massive amount, and it was right around here in this range. We had a massive amount of volume that just bursted into the stock market and took us basically into this massive bull market, because there was a lot of hope and dream that Donald Trump was going to be the solution to our economic issues that we've had. And we have had lots of euphoria, again, going all the way up here to 26.5. We had a lot of chop here. We got a new high going all the way up to about 26.9, almost 27,000. Massive correction, and this just happened a little less than a year ago, in December of 2018, and basically we had our capitulation bottom. A lot of people were talking doom and gloom down here. This was a really great place to buy and to maybe to catch some good spot buys on stocks. But now we're at a point where things are not looking so good. So again, talking about the trade war, talked enough about that. Let's talk a little bit about the U.S. Treasury injecting funds into the market. The United States is printing money like nobody's business. It is insane how much money we are pumping into into our economy. We are pumping so much money in. It is unsustainable. And we shouldn't have to do that. And the same thing with interest rates. We're doing interest rate cuts. We shouldn't be doing that. If the economy is doing so well, we should be raising interest rates. We don't need to be cutting interest rates. You cut interest rates so that you get people to borrow money. You cut interest rates to get people to spend more. Why is it that we are in such a great economy and we're cutting interest rates? We shouldn't have to do that. So we have trade war. We have our interest rates that are being cut. We have us injecting money into the Federal Reserve is injecting money into the United States economy. So why are all these happening? Why are all these things happening? It shouldn't be happening, right? And so we have all of these things going on, and then on top of all of that, we also have our yield curve, which I've talked about this for a long, long time. We're sitting, and we were actually negative. This was back here at the beginning of September. We had a valid inverted yield curve, right? And if I move this from candles to a line chart, we can see. And if I put a point down here at 0, which is approximately right here, we can see where that. Let me get my things back on here. Okay, so we can see that we have moved into a negative territory. We started to work ourselves back out, and maybe that was a result of our cut in interest rates. But we are hitting a resistance area here as well. These charts it's not coincidence that there are support and resistance level, even though we're comparing two indices as far as our yields go in the 10-year and the 2-year bond yields. We are approaching this resistance, which is basically a difference of 0.121%. And more than likely, we're going to start to move ourselves back down. And I really do think that, again, it's going to take time. This isn't going to happen tomorrow. I do think that we're probably going to work ourselves back down into negative territory. We're only talking days, when fact of the matter is we have seen ourselves, for weeks and weeks and weeks, moving ourselves down. Again, if we're talking trend lines, here's a trend line to pay attention to. So we've got trend line here, and potentially we have, kind of a flip of resistance turn support here. That's very possible. That would be a good sign if that was the case. I would like to see us overtake this area for, for our negative yield curve to really kind of fade away just a little bit. But these are the things that I'm paying attention to. I wanted to talk it through a little bit because I know I did a post on TradingView talking through very briefly some of these things. So I kind of wanted to talk through in a little more detail some of the thoughts that I had. So hopefully that was able to help you a little bit. But yeah, if you have any comments or any questions or feedback or debate or anything like that, I'd love to have those discussions with you on the Discord. Again, it doesn't cost anything to join. Come on in. More than happy to have you in. Just need to send me a DM to get an invite. Just we're trying to control spam and fake accounts and all of that. So I would like to have a personal invitation extended out to you to join our Discord and have good conversations with some of the people that we have in there. So yeah, again, love to see you in there. Hope you all have a good night. And I will catch you all, on the flip side. And if there's anything else that you'd like for me to take a look at, feel free to let me know that too. Be more than happy to oblige. So everybody have a good day, have a good night.